Welcome back, everyone, and it is time for the first weekend review of 2026, and I am so hyped to bring it to you. It is going to be a magnificent year, and we are going to conquer the markets together. I don't know about you guys, but I have taken the past week or two really to just kind of chill and be loose while the market was a little slow, and just really kind of soak in all this time that we've had with family. And now I am ready to bring you the most amazing trade plans coming into the new year, and I'm ready to kick off the post-market breakdown starting tomorrow at 5 o'clock. We're going to do that again Monday through Thursday, and it's just going to be a phenomenal year, and I am super duper excited. So I wanted to just let you guys know, if you have not signed up for the trade plans, this is your opportunity to get them for the whole month of January. Check the link in below for the description. Put your email in the landing page, and I will take care of the rest, and you guys can start to have a profitable January, kicking the year off right. So let's get right into the trade plans, dig in, and I'll show you what's up. I'm going to talk about SPX, I'm going to talk about VIX, and of course, as always, our fan favorite, ES. So let's get right into the charts. So let's kick it off with getting right into SPX to start the day here. And I want to bring this up as just context, just to show you guys, look, we've had a nice little pullback at the end of the year. The Santa Claus rally certainly did not show its teeth. We actually were selling off the last week, which is okay. Well, you know, we're into a new year, which means they can buy it up. But I just wanted to bring everybody's attention to the fact that we are only off the all-time highs, 88 points, which is about 1.25%. And we still have an opportunity to continue to go higher, which is more than likely the direction this market will go. However, which way will it go first, up or down? That remains to be seen. So let's just get into SPX real quick. I wanted to show you what was cooking here. You know, we've got this massive leg down here and a lot of support, and we were able to hold this section on Friday, and this was a big opportunity for the bears to really step in and, you know, take it out from underneath the bulls, and they could not. I will talk more about this when I pull up the ES, just because it's a little bit more clear, and I actually made a post about it on Friday as well, which we'll get into. So just to kind of show you the support here, we currently have a 4-hour level at 68.40 that is untested. However, we have some upside resistance at 68.67. So this is a untested daily, and we also have the 4-hour leg down at 68.78 right here. As you can see, this is our little leg down. Let me go down into the 1-hour time frame so that you can see what's cooking here. And you can see the yellow lines are the 1 hours. I marked them out just so that as we start to talk, we can understand what's cooking. So here's the thing, what you need to understand. We haven't lost on the daily and we haven't lost on the weekly, but we have lost on the 4-hour time frame. So we're starting to shift momentum a little bit, but you know, we are still very much pointing to the upside. So I wanted to show you guys what I'm looking at here. Right now, we essentially popped up on Friday at the close. They saved the weekly. They saved, you know, this momentum up. And I will just show you right now, and this looks the same for ES. We certainly have this 4-hour here at 68.40. There's the 1 hour at 37 and 31. This whole pocket is support, and more than likely this will play on first touch. However, it could just take us into this resistance here, and I don't know how much further it can go. You know, I will just tell you right now that I do see this area playing. However, I would prefer to see it play and then push higher versus pushing higher and coming lower. And what I mean by that, and I'll show you when my pin fires up here, is essentially I like this support as long as we play it before we smack what we lost, okay? So what I mean by that is this right here. This to me is an ideal scenario, okay? Up into here or up into here. If we come up here first and then pull back, I would be a little bit more cautious, but still looking to play this. And we want to see us get back above the 68.45 weekly and ultimately the monthly at 49 for our continuation higher. Both of these dailies right here are very, very important, especially the 69.10, but it is all tested. So in order for us to continue our progression higher, this is our big wall up here, guys, 6,900 area, let's call it. And then if they make it above this, we do have an untested weekly at 69.29 and a daily at 36. But I will tell you this, it is still certainly looking bullish. Like I said, the high time frames are still looking up. Now, what happens if this doesn't hold? Well, we still have a very large confluent area down here around 6,800. I could start to, you know, look for longs around 68.12, 68.08, but really my prime location is this 6,800 to 96 area. And so if price does do one of these, this is where I'll be looking. Okay, this is my prime buy location if we push down. Honestly, underneath here, things get a little rough until we get down to the leg end at 67.37, which is a big gap fill, and it could absolutely play, guys. 67.21 to 67.37 is our big leg up. If they end up coming down here, I would look for this area to play and pop. But ultimately, I do see a large potential for us to either play here and go, or either come back down here and go. But this kind of gives you the idea of what I'm looking at for SPX, okay? So that is where I'm going to leave that for this, just for my SPX peeps. And let's go into VIX real fast. So VIX is still looking pretty soft. As you guys know, we talked about this 1493 daily like it was the Bible last week, and as you can see, it very much was. We continued to pop above it and then sell off below it, and this is really our big major above below spot right now for VIX, being above below this daily. As you can see, it's the support to this high, which is clearly very important, and every time that they get below it, it sells back off. Now, we know that we have this daily at 1442, but more importantly, what I'm looking at here is this weekly at 1422. Guys, we have been talking about this for months. It's been the big weekly that, you know, we're looking to be above below. Every time I feel like we get below it, it doesn't last very long and it pops. And so we are going to look for us to be above below 1422. And if it gets below 1422, I do have some untested support down here around 1360. There is a 4-hour and a weekly that did not gain. What does that mean? Well, I guess that essentially means that this level could play or not play. I do look for it to get a reaction, but how big is uncertain, simply due to the fact that it is a level that just has not gained. When levels, we mark levels that actually don't produce any upside result, I have a hard time putting faith in these. As you know, if you were a buyer who bought here once and we pushed up and you didn't get the result you wanted, would you buy there again? Probably not. And so that is essentially the situation where the 1360 is. Someone will buy this. I do expect this to get a reaction, but maybe only to the 1422 and then back down. We will see. One thing I certainly want to keep you guys aware of is that we are, if we push below this 1422, we are going to get back into the $14 handle. Actually, we're in the $14, excuse me. We're going to get into the $13 handle, which is extremely dangerous, guys. I did a post on this. We talked about it before. And it's about how this low VIX should set an alarm off for you guys, because the lower this gets, the easier it is for VIX to pop and send the indices down with a ferocious force, even if it's only for a day or two. But these pops in VIX, when they get this low, you know, could easily be 20-30% to take us back up to here, which is not that crazy, but it will slide the ES maybe a couple hundred points, only for them to squeeze it right back up. It's just we want to make sure that we're not buying on the way down, regardless if the long-term trend is up. So again, just be careful when we approach these areas down here. You never know what's going to happen, even if it's just a pop from here to here. Let's just look and see what that would account for. So yeah, so that's still a 5% pop. That's still a pretty large pop. I mean, that could produce, you know, a pullback in the indices of, you know, 50, 60 points. And so, you know, just be aware of when that happens and when we approach these areas to be looking for this kind of reaction. The area that I'm looking at below is, if we do get below all this, is again this $12, $13 handle, 1277. This is a monster weekly spot, and I would absolutely look at this place for a reaction, and I would probably be looking for the ES to have a reversal if the VIX was to get way down here. So something to keep in mind. Just wanted to point this out to you guys. Obviously, as we know, the 1493 is our pivot for next week. And then if the upside, we run into the dailies at 1573, 1635, and then ultimately we could push all the way up in here into our 1762 spot, which seems so far away now and wasn't not too long ago in December. So kind of crazy how we continue to, you know, build, push sideways and then push down, accept value, push down. And so will we get into the $12 handle? Certainly possible. But if they push above 1762, we do have this weekly up here at 2038, and that is pretty much our last untested until we moon out. So this is going to be the big ceiling on things for now, the 1672, and our pivot's the 1493 on the upside, and the low side is the 1422 weekly. So I just wanted to talk about VIX for you guys. Now let's move on to ES and get into the nuts and bolts of things. As usual, you know I like starting out with this weekly TPO. This gives us a good idea of where we're at in value. And this is a massive 3-week composite. These are 3 weeks that are put together. They were all overlapping. And just because at this point we sat sideways for 3 weeks, and so this becomes one large value area. Okay, we were able to push up, create a new all-time high here, had some inefficiencies. Clearly this week they cleaned it up. And for those of you guys who were watching the week in review last week, we had the opportunity to come down and clean all this up, and we did, and we had the same issue with this. And of course, as you can see, they filled this in as well when we started the week. So it really interesting the way they've been cleaning up these efficiencies. And right now, this is based off of, not off of last week's close, but right now we are looking at approximately an average weekly range of about 111 points. As we've been putting up somewhere right around 100 points. But again, we've had some holiday sessions, so I am expecting a little volatility. Now, there is something that I want to point out to you guys, and we've talked about this a couple times throughout the week last week. And I'm just going to point this out to you because a lot of people didn't catch this. I pointed it out Friday. On Wednesday, we had, we went into a negative gamma regime. We actually had the negative gamma level move from up from, I think it was around 68.70 all the way to 69.50, and we actually touched that level and fell extremely hard on Wednesday. And then again on Friday, the gamma level moved all the way up to 69.75, which was a huge march up. They didn't need to do that. We were already very well underneath that, but they did, which signaled an extremely large negative bias by market makers as dealers are hedging to the downside. So what is that going to look like coming into the week? I'm really not sure. We have to wait until Monday morning to pull our levels, but I just want to let you know right now, we had 2 days last week where even though we're only 80 points off the all-time highs, dealers are hedging short. So there is a little fear in the market as far as dealers thinking that we could sell off, but VIX is, hasn't quite sounded the alarm yet, other than the fact that it's just low. So we'll see where dealers kind of change things out when it comes into the beginning of the week. And, I just wanted to point that out real quick before we got crazy into it, okay? So that is my take on this. Right now, we are sitting right in the middle of this massive value spot here, and we could come potentially a little lower if we wanted into this massive 3-week point of control, which is at 68.51. And there's a reason I'm showing this to you guys where this is at. Please keep this in mind. This will come into play later, and so will this 68.48, which is the current week's previous weekly value point of control. Excuse me, I actually forgot to label that. Let's see, previous week's point of control. VOC. All right, so this is going to be a big spot for us right here on the way up as well. You can see we spent a lot of time there. We have a point of control, a lot of volume, which more than likely does act as a magnet, but it also acts as a point of contention or resistance, however you want to look at it. Okay, so let's go ahead and get into the daily chart now. So I wanted to point this out to everybody. This is a post I put out on Friday, and this was regarding the weekly close. And on ES, and I put this out on Twitter and Substack, you'll see right here I drew a line that we really needed to close the day above 68.83. Otherwise, we were going to have a serious problem, right? So the bulls need to close above 68.83. We got some issues. Well, guess what? They actually did exactly that. They ended up saving it at the end of the day. They were able to keep the price popped and came up, and we closed around 69.03. Again, saving us from closing below this massive weekly leg down, which would have been extremely bearish. And so right now, they've still kind of keeping it together. So again, we haven't lost on the weekly and we haven't lost on the daily. Right now, our signs are pointing up on the higher time frame, but we do have weakness on the 4-hour, guys. So I just want to continue to point that out, that really we could continue to rotate both directions, at least for now, and potentially come a little lower, okay? So getting into, I showed you the weekly, and we've talked about the profiles, and I showed you that big point of control, and we're going to talk about why that's important right now. So here we are, all right? So, okay, so check this out. Being below 69.42, as you guys know, is a big problem. Okay, this is our main leg to the from the all-time highs all the way to the lows here, and they tried to hold above it for days, and essentially on Wednesday they finally closed below it, and they popped back up and got super close to testing it on Friday, or I think that was that was Friday. As you can see right here, they got super close. This is the 4 hour, and then fell again and created another new low. Okay, but like I said, they held this area here and was able to close above on the weekly, which kind of keeps things intact for us right now. However, where does that leave us currently? Well, like I said, I think that we could still, we're in an interesting spot actually, and I'll show you why. Okay, so we have the 68.80.50 spot that is technically untested right now. That's also right in line with our 83 weekly, and I'll show you what that's about. Also, the other big daily that we want to stay above, guys, and this was an important close above, as you can see here. This was the 91 daily. This 91 daily is our leg all the way to the lows from November, and it took us weeks to get back above and actually gain this level. So a close below that would be significantly weak, and right now they are still holding on to that, which is fantastic. Okay, so we do have some resistance directly above us. We played 0825 at the close yesterday, but we still have the 69.1275 daily directly above us. That is the only daily level I have that is untested until we come all the way up here to the untested weekly at 69.7775, and at that point we will be well above the 69.42, which puts momentum well back in the bulls' favor. Okay, so for some of you guys, you might be looking at this and saying, well, this is a RTH chart, it's a little unclear. Don't worry, we're going to go down to the 4 hour. It's going to be crispy as soon as I show you that. But ultimately what we need to really look at is the 68.80 spot and the 91. We want to keep our daily closes above that. However, if they do push down into this area down here, if you recall, I kept saying, hey, pay attention to that weekly point of control at 69.48. Well, we have an untested daily at 68.57, which is very close to that spot, and another daily at 68.43. Okay, and I'm going to pull up the 4 hour right now and show you what's good. I'm going to go ahead and hide these other levels here, and I just want to remind you that if they do come lower, this is the same thing I showed you on SPX. This right here is our true leg up. Okay, we actually don't lose on the daily, at least based on these current candle structure, until we close underneath 67.94.50. It's still technically very much the daily would be very much intact and bullish. However, we do use our leg downs on the side to kind of gauge momentum, and right now being under the 42, as you could tell, shifted things dramatically, and another close underneath the 91 would do the same thing. Okay, so but right now we're looking up and we still have these dailies here. So let's go ahead and get into the 4 hour, and I'll show you what's good on that, and I think it'll be a lot more clear for everybody. Okay, so here you go. So like I was telling you, we are in a very interesting spot. So right now we have lost on the 4 hour. This was our 4 hour leg to the all-time high, and when we closed below it here on, I believe this was Wednesday, we technically lost the leg to the 4 hour. We popped up, we played this area, and again on Friday we come down and had another soft close on the 4 hour. But once again, like I said, and I keep repeating myself because it's very important for you to understand this, is that with the negative gamma regime and the loss on the 4 hour, we could expect rotations both directions. However, the daily and the weekly has not lost, and so from a high time perspective, I am still looking to buy. Okay, now I'm shorting as well, but really my bias is still up until we lose on something a little bit larger. So what I wanted to show you right here is there is a untested 4 hour at 68.80.50. This 4 hour did not gain. Okay, this is technically what I would call developing. It is closed, it is look decent, and I'm going to buy this. And the reason I'm going to buy this is, one, this is the make it or break it spot for the price, because if we do not hold 68.80.50, we come down here, no questions about it. Okay, not only that, but we have the weekly at 83 that was massive, and there is a daily at 68.80.50 at the same exact price that is technically still untested. So this could actually play the weekly, or play the daily and the 4 hour and continue the progression up. It could do this number and continue to keep going higher, as long it really depends on what we do with 69.12, Once you're over 12, we can start to come back up here, and then we have this big 4 hour at 49 to deal with. Okay, but this is a great spot to take an attempt. All right, so if we open above this on the cash session on Monday, I will more than likely take this long and try to ride this up to at least 12, or just take my 10 points, and that would be good too, and try to get out this 91.25 spot. We'll see. But below this area here, we do come down into this massive spot, which again, remember, we have this big 3-week composite at 51. We have the daily at 57. We have a 4 hour at 52.75, another 4 hour at 47, and then another 4 hour at 43. Okay, massive spot. Also, the 50-day moving average is starting to move up into this area, which is always a good spot. CTAs are looking at that. We should be looking at that too, because we can, even though they punch through this, we're not actually looking to play this as a perfect level. But we know if they hold this and continue to pop up, more than likely it will just continue to keep going. As you can see this here, this is a massive moving average that anyone who is a swing trader or a long position manager is monitoring the 50-day, so keep track of that. Anyone who tells you it doesn't matter is a retard. So, excuse me, I shouldn't say that. Is uneducated. Apologize. So just keep an eye on that and kind of go from there. So with that being said, if they lose the 43, we do come down and we start to play this daily leg at 67.94, which is also a fantastic opportunity for us to come down and retest these lows and potentially move higher. So there, not all hope is lost. And can we come lower? Absolutely. I just want to point out, as you can see, they played the 69.08 daily at the close perfect, but they did not hit the 12.75. Do not ignore this level. If they come up here and play this, they could just end up smacking again and coming even lower. However, daily to daily would be 69.12 to 68.80 and kind of see if this plays. But like I said, I'm a little iffy on this, and I don't want to say I don't think this won't play, because I do think it will. I just don't know if it's going to hold to take us all the way back up. I do think it plays. I just don't know for how much. That's why I said I might end up just taking it for my 10 points to the 91 and then kind of figure out what to do after that. We will see when the time comes. And so that's what I've got for you guys here. Right now, in order to kind of shift momentum back up, we need to get above 69.1275. And then ultimately, of course, the 42 is the big boy for us. But as you can see, directly above 42, we do have this untested 4 hour at 49.25, a weekly point of control of 48, et cetera, et cetera. So, things that we need to be aware of and keep monitoring. Again, if the 80 doesn't hold, you might as well expect to come to 43. I do, in 50s, the 50, 40 area, I do expect this area to get some love. How much love? I don't know. Could it just do that? Absolutely could. Once we get below this 83.91 spot, we start to get into some real issues. Don't forget what 91 is, guys. I just showed you this. 91 is this massive leg down. So, once we start to get underneath this, we shift momentum once again, okay? We shift momentum, and a close below that is even more so. And so we just want to keep an eye on this as we continue to lose levels. Right now they've closed underneath the 12. They've closed underneath the 08. They closed underneath the 42. We are starting to walk ourselves down. Right now it's no big deal, as we're still contained inside this major leg. And so they could do one of these numbers, or they could do one of these numbers. I don't know. We don't really know. We just play it by ear. So that's what I got for you guys right now. And that pretty much sums it up. Coming into the week, we are in a very critical spot. Right now, we either hold the 80, the 68.80 spot, or we come down lower. It's that simple. It's not really, brain surgery here. So, just play the levels for what they are, and go from there. So I hope that you guys had an awesome break. I know I did. I desperately and deeply needed this battery recharge. And as you guys could tell, I've just been kind of chilling the past couple weeks, and I am ready and excited to hit 2026 super duper hard. I'm trying to make it one of the best years ever. And so I know that you guys are with me as we continue to conquer these markets. So it was an absolute pleasure talking with you guys today, and I will see you guys tomorrow for the post-market breakdown at 5 o'clock. And don't forget to sign up for the trade plans for free if you have not yet. It's such a deal. The trade plans are so money. I put such a hard work into these. And if you guys can't benefit from these, then maybe you should go trade some oil. All right. I'll talk to you guys another time, and be good. Cheers.